Elon Musk is worth over $200 billion. His official salary at Tesla, $1. Jeff Bezos lives in a mansion worth $165 million. His actual income tax some years, basically nothing. How is this possible? How do the richest people on Earth pay less in taxes than you do? 3 words: buy, borrow, die. It's not illegal. It's not even a loophole, it's literally how the tax code is designed to work. And by the end of this video, you'll understand exactly how billionaires avoid taxes legally while you pay taxes on every single paycheck. Let's get into it. You work a job, you get a paycheck, the government takes their cut before you even see it. That's called income tax, and you can't avoid it. But billionaires, they don't have paychecks. They don't earn income in the traditional sense. They accumulate wealth. And there's a massive difference between earning income and accumulating wealth. Income gets taxed immediately. Wealth just sits there, growing, completely untaxed until you decide to sell. And if you're smart, you never sell. That's step 1 of buy, borrow, die. The ultra-wealthy have figured out how to live lavish lifestyles, buy whatever they want, and pay almost zero taxes. Not by cheating the system, by using the system exactly as it was designed. This isn't a conspiracy theory. This is documented financial strategy used by every billionaire in America. ProPublica literally published the tax returns proving it. So let's break down exactly how this works. Step by step, starting with buy. Step 1. Buy assets that go up in value. That's it, that's the whole first step. But it's the foundation of everything. When Elon Musk co-founded Tesla, he didn't take a massive salary. He took stock. Lots and lots of stock. Same with Jeff Bezos and Amazon. Same with every tech billionaire. They don't earn paychecks, they own pieces of companies that become worth billions. Here's the key. As long as you don't sell those assets, you pay zero taxes on the gains. This is called unrealized gains. The stock goes up, your net worth goes up, but the IRS doesn't consider that taxable income until you actually sell and convert it to cash. Let's use real numbers. Say you bought Amazon stock in 1997 for $1.50 per share. Today it's worth over $200 per share. You're up 13,000%. Your investment is worth millions, but if you never sell, you never pay capital gains tax. Zero, not 1 penny. This is why Jeff Bezos can be worth $150 billion, but his actual taxable income is shockingly low. He owns Amazon stock, it appreciates, he doesn't sell it. No sale means no taxable event. No taxable event means no taxes. Meanwhile, you get paid $50,000 a year, and the government takes $15,000 before you even see the money. Your tax rate? 30%. Jeff Bezos' effective tax rate, according to ProPublica? Less than 1% some years. Sometimes 0. But here's the problem. If Bezos never sells his Amazon stock, how does he pay for his mansion, his yacht, his lifestyle? He can just hand Amazon shares to the grocery store. He needs cash. And selling stock triggers capital gains tax at 20%. So what does he do? He doesn't sell, he borrows. That's step 2. Step 2 of buy, borrow, die. Borrow against your assets to fund your lifestyle. And borrowed money? Not considered taxable income, ever. Here's how it works. You walk into Goldman Sachs or Morgan Stanley with $10 billion in Tesla stock. You say, I need $500 million. They say, no problem. They give you a loan using your stock as collateral. It's called securities-based lending or an asset-backed loan. The interest rate may be 2 to 3%. Sometimes less. Why? Because you're not a risk. You're not some college kid asking for a credit card. You're collateralizing billions in assets. The bank knows you're good for it. And if you're not, they just take your stock. So now you have $500 million in cash, tax-free, because loans aren't income. The IRS doesn't tax borrowed money. You can buy houses, yachts, private jets, whatever you want, all funded by tax-free loans. And here's the beautiful part. You're paying 2% interest on the loan, but your assets are growing at 8 to 10% per year on average. You're literally making money by borrowing money. Your Tesla stock goes up 10%, you pay 2% interest. You're net positive 8% while living off borrowed cash and paying zero income tax. Let's compare that to your situation. You want to buy a house. You take out a mortgage at 7% interest. You're paying that with after-tax dollars money that already got taxed at 30%. The billionaire borrows at 2% using pre-tax wealth. You pay taxes then interest. They pay neither. The system is designed differently for people who own assets versus people who earn paychecks. Let's talk about Elon Musk specifically because ProPublica got his tax returns and published the numbers. Elon Musk is worth over $200 billion. In 2018, he paid zero federal income tax. Zero. How? He took no salary. His Tesla compensation is all in stock options. And he doesn't exercise those options unless he absolutely has to. Instead, he borrows. In 2021, it was reported that Musk had pledged about $170 billion worth of Tesla stock as collateral for personal loans. He's literally living off billions in borrowed money, tax-free. When he needs cash, he doesn't sell Tesla shares and pay 20% capital gains tax. He walks into a bank, puts up shares as collateral, and borrows at 2 to 3% interest. The bank is happy. Musk is happy. The only entity that's not happy is the heirs, and they can't do anything about it because it's completely legal. Now, eventually Musk does have to pay some taxes. In 2021, he exercised stock options worth billions and paid a massive tax bill. He tweeted about it, acting like he was some hero for paying taxes. But here's what he didn't mention. He only paid taxes because those specific stock options were expiring. He was legally required to exercise them or lose them. It wasn't voluntary. And even then, his effective tax rate over his entire lifetime of wealth accumulation is a tiny fraction of what you pay. This is the game: accumulate assets, borrow against them, live tax-free, only pay taxes when absolutely forced to. But it gets even better, because step 3 is the most insane part. What happens when you die? And if you're finding this eye-opening, do me a favor and hit that subscribe button. I break down financial truths like this every week, the stuff they do and teach in school and do and want you to know. Let's keep going. Step 3, die. And when you die, all those unpaid taxes? They disappear. Completely. Forever. This is because of something called stepped-up basis. It's a tax rule that says when you die, your heirs inherit your assets at their current market value, not the price you originally paid. All the capital gains that accumulated during your lifetime? Erased. Let me give you an example. You buy stock for $10. It grows to $1,000 over your lifetime. You never sell it. You borrow against it, live off the loans, pay no capital gains tax. Then you die. Your kids inherit that stock. But instead of inheriting your $10 cost basis, they inherit it at the current market value, $1,000. So if they sell it the next day for $1,000, their capital gain is zero. They pay zero taxes. The $990 in gains that happened during your lifetime? The IRS never gets to tax it. Ever. You literally avoided taxes on $990 of gains by dying. That's why it's called buy, borrow, die. You buy assets. You borrow against them to live. You die, and your heirs get everything tax-free. This is how generational wealth works. This is how rich families stay rich forever. They don't sell and trigger taxes. They borrow and live tax-free. Then they pass assets to the next generation with a clean slate. Meanwhile, if you die with $50,000 in your bank account, your kids inherit $50,000. No basis step-up needed because you already paid taxes on every dollar you earned. The system isn't designed to benefit you. It's designed to benefit people who own appreciating assets. So why is this legal? If it's so obviously unfair, why doesn't Congress just fix it? Because the people who write the tax code benefit from the tax code. Think about it. Who do you think lobbies harder, you or billionaires with armies of lawyers and accountants? Who do you think donates more to political campaigns? The financial industry, banks, hedge funds, private equity, they make billions facilitating these loans. They don't want the loophole closed. Billionaires don't want it closed, and politicians? A lot of them are wealthy enough to use the same strategies. They're not going to vote against their own interests. Plus, there's the ideological justification. The argument is that taxing unrealized gains would be complicated and would harm investment. If you tax people on stocks they haven't sold yet, they'd be forced to sell just to pay the tax, which could crash markets. There's some truth to that. But the current system, where billionaires pay almost nothing, isn't exactly fair either. Every few years, someone proposes a wealth tax or a tax on unrealized gains. Elizabeth Warren proposed it. Bernie Sanders proposed it, and every time it gets shot down. Too complicated. Too radical. Un-American. Meanwhile, you're paying 30% of your paycheck to the IRS while billionaires pay low single digits. The system is working exactly as intended, just not for you. Okay, so can you do this? Can regular people use buy, borrow, die? Technically, yes, but realistically, not. Not at any meaningful scale. Here's why. To borrow against your assets, you need assets worth borrowing against. Most banks require at least $100,000 in investable assets before they even consider a securities-based loan. And even then, they'll only lend you maybe 50 to 70% of the value. So if you have $100,000 in stocks, you can borrow $50,000. Cool, but you're still paying interest on that $50,000. And unless your $100,000 is growing faster than the interest rate, you're losing money. It only works at scale when you have tens of millions or billions where the math makes sense. Plus, regular people can't get the sweetheart interest rates billionaires get. You're not walking into Goldman Sachs and negotiating 2%. You're getting 5, 6, maybe 7%. At that rate, you're not beating the market. You're just paying expensive interest. And a stepped-up basis? Sure, that applies to everyone. If you own a house or stocks when you die, your heirs get the basis step up. But if your estate is worth $200,000, that's not exactly generational wealth. The billionaire passing down $5 billion in assets? That's a completely different game. So yes, the rules technically apply to everyone, but they're designed for and benefit the ultra-wealthy. You can use these strategies at a small scale, but you'll never experience the same tax advantages as someone worth billions. The system rewards wealth at the top exponentially. So why doesn't anything change? Why do we keep electing politicians who promise tax reform, but nothing happens? Follow the money. The financial industry makes massive profits from securities-based lending. They don't want it to stop. Billionaires fund political campaigns, both parties. They're not going to fund politicians who promise to tax them more. And the media, owned by billionaires, they're not exactly incentivized to explain how broken the system is. Plus, tax policy is intentionally complex. The average person doesn't understand stepped-up basis or unrealized gains. It sounds boring and technical. So when politicians say, we need to protect investment and economic growth, people just accept it. They don't realize they're voting to protect a system that benefits billionaires at their expense. There have been proposals. Tax unrealized gains above a certain threshold. Eliminate stepped-up basis. Close the securities-based lending loophole, but they all die in committee. Both parties kill them, because both parties are funded by the same wealthy donors. And here's the ultimate irony: the politicians who complain the loudest about deficits and government spending, they read the same ones protecting the loopholes that cost the government hundreds of billions in lost tax revenue. If we taxed billionaires fairly, we could fund healthcare, education, infrastructure, all the things they say we can't afford. But we can't afford it because we refuse to tax the people who can actually pay. So that's buy, borrow, die. Buy assets that appreciate. Borrow against them to fund your lifestyle tax-free. Die and pass everything to your heirs with zero capital gains tax. It's not a conspiracy. It's not illegal. It's just how the system works. Elon Musk isn't a tax cheat. Jeff Bezos isn't breaking the law. They're using the tax code exactly as it was written. The problem isn't them. The problem is the system that allows it. While you pay taxes on every dollar you earn, billionaires structure their entire financial lives to avoid triggering taxable events. And unless Congress fundamentally rewrites the tax code, this will continue forever. The question isn't whether buy, borrow, die is fair. The question is, are you okay with it? If this video opened your eyes to how the system actually works, do 2 things for me. First, smash that like button so more people see this. Second, subscribe to this channel because I expose financial truths like this every single week, the stuff that system does not want you to understand. Drop a comment below telling me what shocked you most about this strategy. Was it the tax-free borrowing? The stepped-up basis loophole? Let me know. And if you're angry about this, good, you should be. Now go learn how money actually works so you can stop getting screwed by it. I've got more videos breaking down exactly how the wealthy game the system. Check out my video on how credit card companies legally scam you, or watch my breakdown of why your parents' financial advice is keeping you broke. The system is rigged, but knowledge is power. And now you know exactly how they're playing the game. See you in the next one.